The crypto market just printed $165 billion in fresh value in a single day, and the tape reads like a highlight reel. Bitcoin blew past 115,000, Ethereum is knocking on 2,900, and XRP touched $2.52 before pausing. The next magnet is obvious, 260, but with the daily RSI already above 70, a short cool down wouldn't be a surprise. A tight coil around 250 could turn into a springboard that launches the next leg. Under the hood, the flows are stunning. South Korea's Upbit saw $231 million in net XRP inflows in 1 hour, size that only institutional desks can muster. On CoinGlass, open interest for XRP futures has exploded more than 90% week on week, while Bitcoin and Ethereum remain flat to red. This isn't retail euphoria. It's big money positioning ahead of something they think is inevitable. Capital is splashing into utility tokens across the board. Hedera just landed on Kraken, and $400 million poured into HBAR in 24 hours, popping the price to 19 cents for a 10% rebound. Stellar's XLM boasts a 23% weekly surge, XDC tax on 6%, and suddenly every ISO 20022 ready asset is front page again. Why now? 2 words: regulatory clarity. Yesterday, the SEC held a closed-door meeting. No minutes released, but the rumor mill is deafening. Possible XRP spot ETF discussions, maybe a settlement update in the long-running lawsuit. At the same time, Ripple is filing for a U.S. banking license and minting its Ripple dollar stablecoin. The timing feels less like coincidence and more like choreography. Fed Governor Christopher Waller poured fuel on the narrative this morning, saying nothing in finance evolves faster or is more disruptive than payments, and warning that stablecoins will force banks to compete or lose relevance. Translation: the gate is open for a non-bank network to supply liquidity that traditional rails can't match. Some analysts even float the idea that Ripple's infrastructure could one day provide the same back-end liquidity that the Fed's discount window offers now. Far-fetched? Maybe. But a decade ago, nobody thought fintechs would handle more peer-to-peer volume than the big 4 banks either. Market structure supports the story. Exchange reserves for XRP just hit a multi-year low, while whale wallets, those holding 10 million or more, are net accumulators. Each ODL payment burns a sliver of supply, and every newly minted Ripple dollar routes through XRPL, tightening the float even further. If ETF approval arrives while supply is shrinking, you set the stage for a supply shock that derivatives traders can't hedge in time. Keep your eye on Bitcoin dominance. A decisive reversal there would kick off a true alt season, and liquidity will chase the tokens with real cash flow narratives, not meme coins. XRP, XLM, XDC, and HBAR all have live corridors or enterprise pilots that translate directly into transactional demand. Near term, watch 2 levels, $2.40 for support and $2.60 for breakout. A clean close above $2.60 on volume opens $3, a level unseen since the 2017 mania, but this time driven by institutions, not retail hype. If we fail and retrace to the 230 zone, look for open interest to reset. A shallow pullback with steady funding is healthy. Macro tailwinds remain. The Treasury curve is bending under a $38 trillion debt load, and policymakers are hunting for wholesale liquidity solutions. Every headline that says stablecoins threaten banks is an indirect advertisement for networks that already solve cross-border settlement in seconds. Bottom line, the market isn't just recovering, it's morphing. Regulations are solidifying, institutional players are stepping in, and utility tokens are finally being priced for what they do, not what people hope they might do someday. XRP is showing the blueprint, and the bid is telling us smart money gets it. If you found this breakdown useful, smash the like button, subscribe for more real-time reads on the charts, and drop a comment. Does XRP clear 260 before the week is out, or do we retest mid-twos first? Stay alert, stay on chain, and remember, in this market, speed plus utility equals staying power.